So today we're going to start by talking about the dollar, and we're going to start by looking from the monthly time frame. And on the monthly time frame, we're still edging higher into the extreme premium. And then if we scale down to the weekly time frame, so you can see on the weekly time frame, we still have our extreme premium resting right there, and we scale down to daily. So on the daily time frame, we'll have our inefficiency, which is also acting as our drawn liquidity to the upside. And we'll also have the bodies of the candle, which is where most of the volume is resting. So even if we're going to see any form of impulsive move to the upside, I will be anticipating for that to come into the bodies of the candle resting right here. So we'll go down to 4 hour time frame, and on the 4 hour time frame, we had this impulsive move yesterday, and then we also had this rejection into an inefficiency that I outlined yesterday. I said this could be the reason to attract price to the downside at this key level. And if we go to the 1 hour time frame, you can see yesterday I was talking about a break of structure on the 1 hour time frame, because on the weekly we had price come into this inefficiency, and I said after tapping into the inefficiency, all I want to see is a 1 hour shift to market structure. And right here, we'll have a high, a low, and a break of structure. And we have this inefficiency, we'll have a liquidity. And yesterday, I said I'm anticipating for price to come into this key level. If we go to 30 minutes time frame, we'll have an inefficiency. You can still see that even the markings that I have on my charts yesterday, while I was outlining this key level, being a support key level that price could potentially come back into. Look at how nicely price came into that key level, tapped into it, and then another expansion. So let's go down to 15 minutes time frame to see what's there. On the 15 minutes time frame, we can see an inefficiency. Price tapped into the inefficiency very nicely. So let's see 5 minutes. So on the 5 minutes, you can see the key level. I outlined that key level very nicely from the smaller time frame. Price tapped into it. We're seeing a rejection to the upside. My overall drawn liquidity still remains at this key level. Once we're in here, I'm going to be on the sidelines to see what price is going to do. It's either we're going to smash through this key level, use it as support, and then continue higher, or this key level could be a catalyst to send us down, either for a retracement or a reversal. But I wouldn't really be anticipating for a reversal yet in the marketplace from this key level. The reason is because my point of interest that's ignited this entire up move is from the weekly time frame. So I wouldn't really be expecting a 15 minutes time frame to be a catalyst to send us to the downside. I would expect at least a 1 hour time frame to be the catalyst, or a 4 hour or daily, because if the impulse move is coming from a weekly, a 15 minutes point of interest is going to be so small to withstand the impact of a weekly catalyst. Does that make sense? If what I said doesn't make sense, please let me know in the chat and I will explain it further. But meanwhile, what I'm trying to say is the bigger the time frame, the bigger the impact. Now, we're working with a weekly inefficiency right here. So for us to see any sort of resistance from the weekly being the catalyst sending us to the upside, it needs to come from a 1 hour or a 4 hour or a daily key level, right? For example, if we go to the 1 hour, now we can say on the 1 hour, this is an inefficiency. This inefficiency could be a catalyst for us to see resistance. But if you look right here, there's nothing to work with on 1 hour time frame. Nothing to work with. Absolutely nothing to work with right here. I don't see any inefficiency. All I see right here is a 1 hour high, and this is not even the overall high. This is a high within the range low and range high. So price can easily run above this high. Price can actually run this high and still drop down to run this low and still rally above to run this high, because this is a range and anything can happen within that range. Within the range, price can run here, come down, run this low, and then run this high, because we're in a range. It's just like what you're seeing right here. Look at how we rallied and then we ran the low. We could potentially run the high. because we are in a range. And when we're in a range, that is when you can see this kind of price actions that doesn't have any significant directional bias, but they are basically hunting for liquidity. People that are trying to buy and sell it within that range. The algorithm is hunting for liquidity in this kind of situation. So another thing to put into perspective right here is how price came into the bodies of the candle. Like I said, volume is resting at the bodies of the candle. And look how nicely the moment we tapped into the bodies of the candle, an expansion to the upside. And then we saw this retracement, another expansion to the upside. So right here continues to be my overall draw on liquidity to attract price to the upside. Don't forget that today we have CPI news by 1:30 today. If you have any open position, make sure you protect yourself. Make sure you're using as low risk as possible, because CPI usually brings in a lot of volatility into the marketplace. This is not a time for you to over leverage on any position, even though you should never over leverage. But even if you've been doing it before and you've been making money, today is definitely the worst day to over leverage on any position, because anything can happen and you can absolutely get wiped out. So make sure you use good risk management in whatever trade you're entering today and protect yourself at all costs. So that being said, that is my analysis on the dollar. So we're going to look at the euro to see what the euro is doing so far. So for the euro, I was anticipating for the euro to come up to this key level right here. But as you can see, it didn't come up to that key level. And then we're seeing this rejection to the downside. So basically, I'm still anticipating for price to come in here. Maybe we're not going to come in here until the news is going to be a catalyst to spike us into this position, and then either run the high or continue lower to run these lows. But personally, I'll prefer to see these lows get taken, because these lows are liquidity relative equal lows resting right here, and we'll also have this trend line liquidity resting right here as well. So I wouldn't be surprised for price to run this lows. And as you can see, right here, how price is tapping the trend line, coming here, breaking through, and a lot of traders are going to have their stop losses resting above this high right here. This right here, right, this high right here, there's going to be so many stop losses resting above this high, because traders are going to be trading off this key level as a trend line. They're going to be selling off that key level. So the algorithm is going to be hunting places like this to run the liquidity. And then if whether we're going to go to the upside or downside, this liquidity is going to be so juicy for price to want to run through this liquidity before going to whatever direction it wants to go to. Personally, I'm still anticipating to see the euro US dollar go to the downside. I've already outlined my key level where I'm watching. We have this sell side liquidity resting right here. And if we use our Fibonacci from the overall low to the overall high, right here still remains our extreme Right here still remains our extreme discount key level. So I'm still waiting patiently for price to come into this key level. And once we're in here and I see a significant shift in market structure, I'll be looking for a reversal. But if I don't see a shift in market structure from this key level, I'll just be on the sidelines. So that is what I'm watching on the euro US dollar. So we're gonna look at other pairs as well. So far, you can see Euro US dollar is dropping nicely, and it's coming into this key level right here, the inefficiency. So it's coming into this key level. So we're gonna see what's gonna happen when it comes to this key level. And for now, there isn't really any trade to get into. For now, we're just gonna be watching to see what price is potentially gonna do for today. So if we don't see any good setup for today, we're just gonna set it out today because of the CPI news, and we don't want to be risk on in cases like this, because one thing is to protect your account. The first thing you do in trading is account preservation, and after that, account appreciation. And right now, in days like this, we need to focus more on account preservation. So that being said, we're going to look at GBP US dollar, see what GBP US dollar is doing. So GBP US dollar, as you can see, is going up against Euro US dollar going down. So basically, the two are having what they call a cracking correlation. So right here, this one is still pushing towards into this inefficiency. and while the other one is pushing towards the inefficiency resting to the downside. So you can see this one is edging lower while this one is edging higher. So that's basically what we call a cracking correlation. And the two are basically going towards opposite directions. So that is another reason for you to know that trying to trade right now is low probability, because the cracking correlation actually helps you to know when you're going to be in a high probability setup. And setups like this, they are all low probability, because while I'm looking at GBP US dollar, I'm still anticipating for GBP US dollar to trend to the downside, but it continues to go to the upside. So a lot of reasons why I'm looking at it to go to the downside. We have liquidity resting right here, and then another reason, the inefficiency resting right here. If we go to daily, see what it looks like on weekly. Now on weekly time frame, we still have an inefficiency resting right there that will mitigate it. So a lot of reasons for this to potentially come to the downside, liquidity resting right here. But at the end of the day, we have CPI. Anything can happen. It can spike price to the upside and run this buy side liquidity, because we still have liquidity resting right here as well. So that is the point of just being on the sidelines on days like this until we see a very good trade. But until then, we're just going to be on the sidelines and wait to see what price is going to do. So another one we're going to look at is gold. We're going to look at what gold is doing so far. And so far today, as you can see for gold, after we came into this position yesterday, we had that miss out on that trade yesterday, and then price dropped, took this low, ran liquidity from this previous low. Now, the next thing we'll be anticipating is for price to come up to the upside, potentially to run buy side liquidity. And then we're going to be waiting around this key level to see what price is going to do. If it comes in here and shows us its hands that it wants to go to the downside, we'll look for sells. But if it doesn't, then potentially we could potentially run this highs, because price has come to this key level quite a lot of times, and now we have liquidity resting right here. So I won't be surprised if the market is hunting for these liquidities. I will not be surprised if price should rally above those liquidity. So for now, I'm just sitting on the sidelines for gold. I'm not really going to jump into any trade on gold yet, because the price action is a little bit too lethargic, which is still evidence of the CPI news coming out today. So right there, you can see we're still edging. I expected that drop after a run on this low. I expected it to continue lower and run this low eventually. But as you can see, we're still seeing price come back into where it was yesterday. So the price action hasn't really been the best so far. So that is why I'm not really gonna to take any trade on gold yet until I see a better setup. So another one to look at today was GBPAUD. So for GBPAUD, I was gonna call this trade out to the members yesterday, but it wasn't really ready. The trade was not really ready. Then yesterday around, I think it was around 8 p.m. yesterday, I saw price come down here, took the low, and then break structure. And I wanted to post this trade out to the members yesterday, and then I was thinking it's just not the time of day to post any trade, any limit order. And then for me to wake up in the midnight around 3 a.m. and saw that price is actually activated at the key level where I was anticipating to send out to the members. And it basically activated around 1 or 2 a.m. in the midnight. That was when it activated. This was the entry stop loss right here. And it activated and just expanded higher for a 1:7 risk to reward ratio. So this is the reason why I was saying the other time last week, a lot of the time, if I'm to be waiting for price for the market to open for London session to post a trade, we're gonna miss out on a lot of good trades. Just like this one, we missed out on this one. Such a beautiful trade, 1:7. But now we're not on it because I was waiting for us to have a London open and then start off the day right, come to the office, post the trade, and just like the normal usual way we do it on a day-to-day basis. But as you can see, price wasn't giving us that opportunity. It's just basically wanted to do its thing during Asian session. So for future references, I'm most likely going to be posting trades outside London or New York session. It could come by 9 p.m. London time or 8 p.m. London time. The only thing there is if you feel like you don't if you don't feel comfortable taking the trade, then that's fine. You don't really have to take the trade, right? Because all that matters is the people that are interested in the trade, they just take it. And if it's a win, it's a win. If it's a loss, it's a loss. So rather than us waiting, because I waited for this trade for like a week, took the first entry around here, and then price came in and took us out. So I was still anticipating for another shift in market structure to take a second entry. And then I saw that around 8, 9 p.m. yesterday, but I didn't take the trade because I was anticipating for the London Open by 8 a.m. and then post the trade. And now it didn't even wait for us to get to London Open and just expanded higher. So it was already a missed trade. So, but I'm looking forward to see if we can get a re-entry today with the news coming up. Price might spike down into this key level. And if it does, that will give us an opportunity for a re-entry. So that is just the only trade I'm watching very closely for today. But with the way it's spiking to the upside, I really doubt that price will come back in here. I really doubt prices will come back in here. But even if it doesn't come back in here, it's all good. It's just part of trading. Sometimes you get into some, sometimes you don't get into some. So that is just all I'm looking forward to see on GBPAUD. So if you have any pairs that you want me to take a look at, you can still drop it in the chat and I'll look at it. So we're going to look at USD card as well. So for USD card, I still remain bullish on USD card. If we go to the daily time frame, this is our range low, range high, extreme premium, extreme discount. Price came into the extreme discount, mitigated this last down close candle, expanded to brick structure, and after we mitigated it, we saw an expansion to the upside. So where could we potentially be heading to for GBPAUD for USD card is right here. So potentially this buy side liquidity is where I'm anticipating to see price gravitate to. One reason is because we also have our extreme premium resting right there. So that is the only place I'll be anticipating to see this. But most especially, I'd like to see this high get run over at least again. I would like to see price gravitate to the upside for USD card, run this buy side liquidity. So if it runs it and use it at support, then this would be the next key level that I'll be anticipating for it to gravitate to. And if it runs this high, then the extreme premium will be my next line of defense. If we are to anticipate for any sort of reversal, I will be anticipating for that to happen right here. So that is my analysis. If you have any questions, you drop it on the chat and I'll be there to answer. I appreciate you all for tuning in and I'll talk to you all in the next live stream. Have an amazing day, everyone.